Hello, all my favorite traders. Once again, the FCI Futures is back with latest analysis on the upcoming PPI data and how it will affect the gold market today. So without any further delay, let's move to know what is PPI data and how it impacts US dollar based on past performance. And based on that, we will try to figure out what will be impact of it on today's scenario if the data comes positive or negative. Producer Price Index is change in the price of finished goods and services sold by producers. It's a leading indicator of consumer inflation. When producers charge more for goods and services, the higher costs are usually passed on to the consumer. In simple words, higher the PPI data comes, it will result in more increase in prices of finished goods and services, resulting in high inflation. In past few months, due to strict monetary policy by Fed, the PPI and core PPI data was decreased very rapidly in USA, which is good for consumers as it resulted in decline in prices of commodities. Now the next question will be, what is the impact of PPI data on US dollar? The answer is that there is a direct relationship between PPI data and US dollar. This means if the data comes positive, then the dollar will rise, and other currencies and commodities will fall. On the other hand, if the data is negative, then the dollar will fall, and all other currencies and commodities like gold will rise. Now, as we are much clearer about the relationship between PPI data and its impact on dollar and other pairs, let's have a quick technical analysis on gold and how we can grab today's opportunity. First of all, let's have a clear view on what support and resistance do we have in gold at current situation. On the support side, we can see a good support at 1910 level, which is followed by 1902 and 1890. Let's mark them as S1, S2, and S3. When we talk about resistance, then we get 1922, 1932, and 1944. Let's name it as R1, R2, and R3. So, as now we know support and resistance levels, we have to know what strategy we should follow once the data is out. Keeping it simple for you, let's have situation 1, if the data comes positive. This means that dollar will be stronger, and hence we have to sell gold from higher range around 1922 or 1932, whatever we get during data time. And target support levels of 1912, 1902 and 1890. Now let's have situation 2, if the data comes negative. This means that dollar will be technically weaker, and hence we have to buy gold from lower range around 1915 or 1910, whatever we get during data time. And target resistance levels of 1922, 1932 and 1944. Traders, I hope now everyone is clear with the strategy that we have to follow during the data time, so let's make it worth it today and make a good Friday out of it. Traders are advised to use proper stop loss and lot so that you don't get trapped in any manipulation and incur huge loss. So traders, get ready for the biggest opportunity and book every profit that you can. If you don't know what to do or how to do that, I am here to help you at FCI Futures with all my dedication and experience. Thank you so much for watching. Do follow us on WhatsApp, Twitter, and Instagram. Subscribe on our YouTube channel for such daily analysis on gold and important fundamental data.